Today we are discussing the topic cost accounting. We know generally accounting has three branches: financial accounting, cost accounting, and management accounting. The object of financial accounting is to find out the profit of the business organization. It has some limitations. To overcome the limitations of this financial accounting, the cost accounting has emerged. The object of cost accounting is to control and reduce the cost of production of a commodity. The third branch is the management accounting, which gives information to the management for decision making. Here, the cost accounting gives the information related to all the costing, cost accounting, and the practice of costing. First, we can go through the cost. Cost means simply all expenses incurred for the production of a commodity. Suppose for the production of this pen, we need material and the effort of the labor and some other expense. Administration, advertisement, and distribution expense will also be incurred. The expense incurred for all these constitute cost of production of a commodity. Schindler defines cost is the resources that have been or must be sacrificed to attain a particular object. According to ICMA, cost is the amount of expenditure, whether it is actual or notional. Amount of expenditure that is actual or notional incurred on or attributable to a given thing. Actual cost is the expense that requires actual outside cash payment. Suppose if a person is using his own resources for the production of a commodity, he is not purchasing it from outside by paying cash. Even then, the value of that will be included in the cost of production. That is called notional costs. That does not require actual outside payment. So, the amount of expenditure, actual or notional, incurred on or attributable to a given thing is called cost. Next is costing. Costing may be defined as the technique and process of ascertaining costs. Techniques are the principles, rules, and regulations, and the process are the methods used for ascertaining cost. The technique and the process of ascertaining cost is called the cost. Next is cost accounting. Cost accounting is a recording of costing information. That means it may be defined as accounting for costs, which begins with the recording of expenditure and ends with the preparation of statistical data. Next is cost accountancy. Cost accountancy is the practice of an accountant. That means if you are applying the theoretical knowledge in the practical situation, it is the cost accountancy. ICMA defines cost accountancy as the application of costing and cost accounting principles, methods, and techniques to the science, art, and practice of cost control and ascertainment of profitability. It includes the presentation of information derived therefrom for the purpose of managerial decision making. That means it is the application of costing and cost accounting principles, methods, and techniques to science, art, and practice of cost control and ascertainment of profitability. Generally, the entire portion included in cost accounting may be grouped into 4 categories. One is elements of costs, second methods of costs, third systems of costs, and four techniques of costs. Element means what constitute the cost to a product. What are the ingredients required for the production of a cost? The value of the expense for these ingredients constitute cost of production of a commodity. There are three elements of cost: material, labor, and expense are the three elements of costs. Second method denotes the ways of ascertaining costs. Basically, there are two methods of costing: job costing and process or operation costing. All other methods are the subdivision or extension of these two basic methods. There means the type of job costing are contract costing, batch costing, and the process costing consists of operating costing, operation costing, multiple costing, etc. System denotes the ways of recording costs. There are three ways of recording costs. If we are recording the cost after they have been incurred, it is called historical costing. If you are recording the cost at the time of incurrence, it is called concurrent costing. If you are recording the cost before their incurrence, that is called estimated cost. And the fourth is the techniques. Techniques are used for controlling the cost of production. The major techniques used for controlling the cost are marginal costing, budgetary control, and standard costing. Other techniques are historical costing, absorption costing, etc. are used for controlling the cost of production. These are the broad classification of costing: elements, methods, systems, and techniques. This what constitute cost to a product, the ways of ascertaining cost, the means of recording cost, the ways of controlling costs. Then we can discuss elements of costs. Element constitute material, labor, and expense. This each element can again be classified as direct material, indirect material, direct labor, indirect labor, direct expense, and indirect expense. Direct means the material that will become the part and parcel of the finished product. The material that indirectly helps support the production function is called indirect material. If we are adding the total of direct material, direct labor, and a direct expense, we will get prime costs. It is called a prime cost or direct costs. If we are taking the total of indirect material, indirect labor, and indirect expense, it is called overhead. This overhead can again be classified on the basis of function: factory overhead, administration overhead, selling and distribution overhead. So, we can discuss how the total cost of production is arrived while preparing a commodity. Before going into detail, I am giving two terms: cost center and cost unit. Cost unit is the unit of a product, means a part of the product for which cost can be identified. Suppose if you are purchasing a commodity, that it will be divided for fixing or for identifying the costs. Suppose if you are purchasing milk, that will be expressed in terms of liter. If you are purchasing cloth, that is expressed in case of on the basis of meter. So this is the cost unit. That means a unit of a product. Cost unit is the unit of a product or time or service in which cost may be ascertained. Cost center is the fact that is incurred for, that means for which cost is incurred for the production of a commodity. That means cost unit is the maybe a location, it is maybe a person or an item of equipment or group of this for which cost may be ascertained and used for the purpose of cost control. Suppose if you are hiring a place and paying rent, the cost incurred because of hiring this place. So that location is the cost place. If you are hiring a person, if you are appointing a person and paying salary, he is the cause of cost. So he is the cost center. What are the purpose for which we are paying money? Then all are the cost centers. This cost may be prime costs, that means direct costs. This is a type of classification of cost: direct and indirect. Direct cost is the cost that can be identified and allocated to a cost center or a cost unit is called direct cost. Indirect cost means the cost that cannot be identified and allocated to a cost center, but that will be apportioned to different cost center or a cost unit. Suppose wood in case of furniture, leather in case of shoes are the main part, or cloth in the case of garment are the main part. The cost of that can be identified and that can be charged to a particular product. So that is the direct cost. A cost that cannot be identified. Suppose if you are paying salary to the manager or salary to the watchman, that cannot be identified and allocated to a particular department. That is the expense incurred for the total department. That will be divided according to the benefit and apportioned to different cost centers. That's why it is called indirect cost. Similarly, we can classify, I previously told, this material may be of direct material or indirect material. The material that can be identified and allocated to a cost center or a cost unit is called a direct material. The material that cannot be identified and allocated to a cost center or a cost unit, but that will be apportioned among different cost center or a cost unit is called indirect material. Similarly, labor that can be identified and allocated to a cost center or a cost unit is called direct labor. The labor that cannot be identified but that will be apportioned different cost center or a cost unit is called indirect labor. The expense that can be identified and allocated to a cost center or a cost unit is called a direct expense. The expense that cannot be identified and allocated, but that will be apportioned among different cost center or a cost unit is called indirect expense. So, by using these all elements of costs, we have to prepare a statement for arriving the total cost of production of a commodity. That is called cost sheet. Cost sheet is the statement which is prepared for identifying the total cost of production of a commodity. In the cost sheet, we are classifying the total cost in the element wise as well as direct, or means traceability. First, we have to write direct material, next direct labor, then direct expense. These three constitute prime costs. So, prime cost is the sum total of direct material, direct labor and direct expense. Next is the indirect cost, that is classified into three: indirect material and indirect labor, indirect expense. The total of indirect material, indirect labor and indirect expense constitute overhead. Overhead on the basis of function, which is classified into three categories: factory overhead, administration overhead, and the selling and the distribution overhead. So, if you are adding this factory overhead with the prime costs, we will get works costs. If you are adding administration overhead with the works costs, we will get cost of production. If you are adding selling and distribution overhead with the cost of production, we will get cost of sales. And if you are adding profit, that will constitute total sales. This is the format of cost sheets, which comprises all the direct expense as well as indirect expense. If there is a work opening and closing stock of material, that is to be adjusted here in direct material, add opening stock, deduct closing stock. If there is opening and closing stock of work in progress, that is to be adjusted with the factory overhead, add opening work in progress, deduct closing work in progress. If there is opening and closing stock of finished goods, after cost of production, we have to add opening stock of finished goods, deduct closing stock of finished goods. This is the format of cost sheet. By using this, we can identify the total cost incurred for the production of a commodity. Generally, this format is used in job costing.